Welcome to CryptoCryptid. Today we're going to look at crypto crashing, and if you want to know more about crypto, make sure you follow our channel. Let's get into the video. Speculative investors may have been pushing meme stocks to the moon earlier this week, but their crypto counterparts have been coming back down to earth en masse. Hedging activities on the rise and bullish bets are finding limited demand, even with Bitcoin still almost below 40% below its peak. There are rare times of restraint among day traders, who until this month's $500 billion crash were famously in the throes of bullish mania. Bitcoin sold off sharply on Wednesday, and the slump represented an acceleration of a downtrend in the world's #1 crypto that had begun over the past 10 days or so, investors and industry specialists told MarketWatch. At last check, Bitcoin prices were changing hands at $38,732.56 on CoinDesk, which is actually a remarkable feat since it touched the session low of $30,201 before bouncing back. Prices of Ether on the Ethereum blockchain were off 22% at $2,608 after touching an intraday nadir at $1,902.08, and Dogecoin was off 25%, changing hands at 35.8 cents. When Bitcoin increasingly sneezes, the rest of the crypto complex catches a cold because the dominant digital asset has increasingly become a gauge of sentiment, not just in non-conventional markets, but as a measure of risk appetite more broadly. Crypto markets have shaved more than $850 billion from their combined market value. The price of Bitcoin dropped off a cliff after Elon Musk announced that his electric car company Tesla would no longer be accepting cryptocurrency payments. He expressed concerns in a tweet on May 13th that cryptocurrency was coming at a cost to the environment. Central banks and governments around the world are also becoming increasingly concerned about the risk of cryptos to the environment, financial stability, and individual investors' wallets. The picture has worsened for digital currencies after some banks blocked payments to crypto exchanges. Starling Bank has temporarily stopped its customers from transferring money to cryptocurrency exchanges because of concerns about criminal activity. We have temporarily suspended outbound faster payments to cryptocurrency exchanges to protect customers, it said. Having observed high levels of suspected financial crime with payments to some cryptocurrency exchanges, this is not just an issue for Starling, but for all banks. The suspension will lift on June 23rd. People can still use their Starling debit card to make payments. So Bitcoin is crashing, and true believers think it will whip around and head to $120,000, but this developing crash has been coming for some time. The market doesn't listen to me. I simply make my models and see if they pan out. I've been fortunate so far, both on calling this bull market and in jumping off cryptocurrency into DeFi, then NFTs, and finally out entirely with a decent helping of luck on my side. However, I'm not Nostradamus. Instead, I draw the simplest charts I can and see if they come to pass. Consequently, I have a simple chart for how this crash, if it continues as I expect, will develop. The simplest chart would be a replay of 2018, and I do believe that would be a reasonable, if sloppy, guide in the short term. It suggests down, way on down, but this time circumstances are not exactly the same. The top of this bull is longer and therefore broader, and the rise is greater because of the entrance of institutions. This changes how a crash will play out. This is the end of the Bitcoin 4-year cycle, and everything follows from that. People of course want narrative. Why, oh why is my money going to money heaven, they say, as if it's a 4-year cycle is not a good enough explanation. To me, it is as simple as that, and this model has served me extremely well. So why give up on it now as it continues to call the big moves? If we see the low $30,000 soon, it will then be a question of will we see $10,000 to $20,000. To me, that's possible, because when the I bought at the top brigade stampedes for the exit, it will get extremely spicy. For me, it's that simple. Sell the bubble, buy the crash, and the following crypto winter. I did that after 2017, and I've sold the bubble and I'm waiting to buy the aftermath of the crash this time round. There will be no hurry because the next crypto winter will be as long as the last, and the coming boom will likely be twice as high as this one. Whether you've invested or not, there are a few things you need to know about the latest crypto crash. Cryptocurrency has been having a wild ride. After starting the year reaching staggering new highs and shattering records, it is now plummeting just as quickly. Bitcoin and Ethereum are both down around 30% since mid-May, and Dogecoin has dropped by more than 40% in the same time frame. For investors who are new to crypto or are considering buying, the sudden crash may be nerve-wracking. Whether you're thinking about buying, have already invested, or are simply curious about what's going on with cryptocurrency, there are a few things to know about the latest crash. The crypto crash appeared to come out of nowhere, but there were a few factors that led up to it. For one, Tesla CEO Elon Musk announced that the company was suspending its acceptance of Bitcoin as a form of payment due to concerns over its impact for the environment. In order for Bitcoin to succeed over the long term, it needs widespread adoption from merchants. When Tesla announced earlier this year that it would start accepting Bitcoin, crypto supporters were excited that this may mean other companies would follow suit. Now that Tesla has backtracked, many investors are concerned that Bitcoin will have a harder time gaining acceptance, especially considering Musk has been one of Bitcoin's most prominent supporters. Around the same time as Tesla's announcement, China began cracking down on cryptocurrency as well. While China has discouraged crypto for years, it recently revealed that it was imposing heftier penalties for Bitcoin mining, the process of creating new Bitcoin tokens. Bitcoin mining has long been concentrated in China, and the country's crackdown could affect the global crypto market. While the current crypto crash may be unsettling, it is nothing that cryptocurrencies haven't experienced before. Crypto has always been subject to extreme volatility, so this is not necessarily a new phenomenon. In fact, even the biggest names in crypto, Bitcoin and Ethereum, have taken tumbles much worse than the current downturn. The price of Bitcoin has plummeted by roughly 80% in the past, and Ethereum once lost more than 90% of its value over the course of a year. Cryptocurrency is one of the most volatile types of investments out there, so plunges like these shouldn't be too surprising. Many experts also believe crypto has been overvalued, so it was only a matter of time before the bubble burst. Despite their dramatic downturns, the major cryptocurrencies have consistently recovered from their slumps. Both Bitcoin and Ethereum went on to see their prices increase exponentially after losing 80% and 90% of their value respectively. Even considering the current downturn, Bitcoin's price is still up more than 300% over the past year, and Ethereum is up by a staggering 1,150% in the same period. That said, there are no guarantees that cryptocurrencies will always recover from their crashes. Crypto is still a highly speculative investment, and it may or may not succeed over time. So if you're thinking about investing, keep in mind that there's always a chance that someday crypto won't be able to come back. Cryptocurrency is a high-risk investment, and it's proven yet again that it's no stranger to volatility. If you're considering buying, right now may be a good opportunity because prices are lower. Just to be sure you know what you're getting into, because while crypto can be lucrative, it's not the right investment for everyone. Despite their dramatic downturns, the major cryptocurrencies have consistently recovered from their slumps. Both Bitcoin and Ethereum went on to see their prices increase exponentially after losing 80 and 90% of their value respectively. Even considering the current downturn, Bitcoin's price is still up more than 300% over the past year, and Ethereum is up by a staggering 1,150% in the same time period. That said, there are no guarantees that cryptocurrencies will always recover from their crashes. Crypto is still a highly speculative investment, and it may not succeed over time. So if you're thinking about investing, keep in mind that there's always a chance that someday crypto won't be able to bounce back. The crypto market tends to move up and down in line with the Bitcoin sentiment, but Mr. Villager says over the long term, tokens that have actually have some use case or utility are best placed to survive, so know what you're buying. To further limit damage, buy on the lows, not on the highs. Mr. Villager says we can expect plenty of both. In crypto markets, volatility begets volatility. More than $250 billion evaporated from the Bitcoin market alone last week. Though that number seems astronomical, such moves aren't uncommon in the volatile crypto market, he added. In terms of Bitcoin's outlook, things may be looking grim right now, but historically, this is just yet another hurdle for Bitcoin to overcome, and a small one compared to what it has braked in the past. Bitcoin is still up over 30% year to date and around 300% in the last 12 months. That's all for today, and if you find the video helpful, please like, comment, and subscribe to our YouTube channel. Stay tuned for more cryptocurrency related news, and I'll see you in the next video.